Yeah.
Okay.
So I want to the usual welcome everybody. I'm Tony Burns. I'm one of the 3 co-directors for the Centre of the Study of Social and Global Justice. I'm going to chair this evening's session. Andy's going to give the 3rd lecture in his lecture series on the 2nd volume of Marx's Capital. So we finish after 7. Andy's going to talk presumably 40-50 minutes, and then we'll have plenty of time for discussion. And I'm sure it'll all be very civilized. It usually is, isn't it? We don't really need a chair, but anyway, I just think it's probably quite a nice thing to do. Right, I'm going to shut up now then and let Andy get on with it.
Thank you very much. Just check that you can see this anytime soon. I've got to get it in the right state. Okay, can you just confirm you can see that? All right. Yeah, thank you very much. Okay, well, welcome everybody. As Tony said, this is the 3rd lecture. The title is quite important for you to remember. It's about turnover, fixed and circulating capital. And I'll be covering Marx's chapters 7 to 11 of volume 2. So I will very quickly look at what we did in part 1. But the main emphasis is driving forward now into this part 2. And the lecture today is the first of a sort of a mini cycle of 3. So part 2, turnover, is going to take 3 lectures. And this one, as I've already said, is very much about turnover, fixed and circulating capital. The last 2 of this suite of 5 kind of like form a sort of subcategory, if you like. There, where Marx talks about other political economists' take on this, it's a sort of material that he also writes about in theories of surplus value. So we'll look at that a bit more briefly than the chapters 7, 8, and 9. And within those chapters, I think chapter 9 is the most important in terms of if you want to study it and you want to know, have you got this argument clear in your head, then you have to work on chapter 9 and check that you understand it. Then I want to look at the literature a little bit, and of course there'll be time for evaluation. The movement from part 1 to part 2 is an example where Marx moves from the abstract to the concrete. He's looked at these different forms of capital, the money capital, commodity capital, productive capital, and then again commodity capital in their circuit. And we've seen he's had a very dialectical sort of treatment. He constructs this in a very dialectical way. What we're going to see now is how he uses that to look more in terms of, if you like, more specifically economic categories and bring matters close to the way bourgeois economics sees them. The other point which we looked at is how Marx starts with money capital in volume 2. And this is in contrast to volume 1, where Marx starts with labor. So labor produces commodities, and labor exploited by capitalism produces capitalist commodities in volume 1. Now Marx starts with money capital producing commodities by employing labor power, by buying workers and buying machines and raw materials on the market. So he starts off in circulation. And the circulation here, the circuits here are of capital, and they goes into production. So it's capital in production, and that production produces commodities. And again, it's capital in the commodity form. Those commodities are sold. So the blue arrows are movement of material commodities, if you like, and the brown arrows are money. So we come back to money capital at the end of the circuit that starts with money capital. So this is fairly familiar to us as we've studied part 1 of volume 3. So what we're going to do now, what Marx says now, is he puts an egg timer on it. He says, well, let's look at the effect of the time. We've already looked at successive steps through time of the forms of capital, and he's going to take that analysis a bit further. He's going to look at how much time does it take for the M at the beginning to become M at the end. So he's interested in how long it takes capital to come back to its starting point. Right. And that's the first definition that he's going to be using, which is turnover time. The overall time of circulation of a given capital is the sum of its circulation time and its production time. We've seen this already. He separates out how long it takes to produce stuff. And then we know that once the stuff is produced, it has to be sold. And we also know that in order to set up production, the capitalist buys commodities. So these are periods of time which are necessary for capital, but they're not actually production. They're where capital is buying and selling, basically. Marx is also looking at what he wants to investigate is how long does it take for the total capital to rotate, to come back to its starting point. He's going to look at this in a lot of detail. We're going to follow his analysis. It's important for reasons which are not immediately apparent. It becomes very important when we look at the profitability of different sectors of production. Turnover time is one of the main variables that affects capitalist profitability. So that can vary between different sectors. You can imagine some sectors have to invest over longer periods before their commodities are produced and sold than other types of industries. I mean, just think of the examples he gives are locomotives and cotton, spinning cotton. But you can think of lots of other examples, I'm sure. One of the issues then is what's the time period we're looking at? And Marx is clear, and I think he's right in terms of our sort of assumptions even. We don't even question it, that we generally think of this as an annual sort of rotation. Profit rate is actually profit rate per year, for example. To most accounts are by years, so on and so forth. So just as the day, he says, is the natural measuring unit for working time, for the turnover of capital, the natural unit that we're used to, and it stems from agriculture, is the year. So there's two main variables here. This doesn't need to be as complicated as maybe it looks here. There's just basically, if you think of a year, and if there's 4 turnovers in a year, then each turnover would be a quarter of a year or 3 months. And that's just a very simple relationship. So you have one is the inverse of the other. So the shorter the turnover time, say the turnover time was 1 month, then the capital would turn over 12 times in a year. Okay. And the point of the turnover time is it's the time which the capitalist will get his money back in the same shape as which he originally advanced it. So when Marx says shape here, this is about form and I would say amount as well. So if capitalist invests £1 million, how long does it take before he's sold £1 million worth of stuff and he gets £1 million back? So it's not yet profit, by the way, it's just how much for the original advance to come back. That's the turnover time. So you may remember this from my volume 1 lectures. We set up then just production, which I call capital's domain. Now we're going to expand capital's domain, as we've learned that capital's domain includes commodity capital, includes money capital. In other words, capital's domain is through these 3 forms of its existence, not just the direct control of production. And we will recall, if we recall volume 1, that Marx sets up 3 core categories in the production of commodities. And he distinguishes constant capital and variable capital. In other words, constant capital is material and the machines, means of production, whose values are transferred to the final product. And then variable capital, which buys labor power. And the reason Marx calls it variable capital is because it's labor power which is the source of the surplus value. So we're familiar so far with this type of setup. Now Marx is going to apply to this fundamental analysis in terms of the production of value another frame of analysis, which is to do with this circulation question. And he first looks at fixed capital. Fixed capital is, as he says here, things like machines and buildings that never leave the production process. So we can think of the circuit as their capitalists spend some of their money capital, they advance money capital, they buy machines, those machines are then set up in the factory, and they stay in the factory as part of the production process, and so they're part of a circuit. Now, machinery and buildings pass their value over to the finished product bit by bit, while they themselves stay in the production process. So Marx gives examples of this, and what you can see after one period of time is a certain amount of value is passed over to, in this case, the yarn. That's the yarn. And the equivalent value of the means of production diminishes. So there's no net change in value, but the distribution of it changes. Some of it has been passed over into the product that's produced. Now, this phenomenon, by the way, is well known in capitalist economics. It's depreciation, it's its normal terminology. So the point is that with machines, and especially even more so with buildings, which might keep their value for 30, 40, 50 years, this passing over of value bit by bit lasts more than one turnover period. It lasts for many turnover periods. So within any given turnover period, we haven't yet got the full cycle of the fixed capital. So there you are. This is exactly what he's saying here. It's over an extended period of time. Just to repeat, this sort of category is well known to sort of orthodox economics. Okay, fixed capital depreciates over a long period of time. So that's fixed capital for now. Let's move on to circulating capital. Now, Marx points to the conventional idea of circulating capital first in terms of raw materials. So here we have cotton. Now, the thing about this is that its use value enters completely into the commodity that's produced, and its entire value passes into the commodity that's produced during one turnover period. So the entire value, this is the value of the cotton, is reproduced in the value of the yarn. Even if it's a very complicated chemical process and the use value changes a lot, the value in its entirety will pass over. So the turnover for this type of input in production is much quicker, because when the commodities are sold, then what we have is the money coming back and a replacement cotton bales are bought in order to go back into the cycle of production. Okay? So the replacement of these values in their entirety is much quicker and fuller. It also applies, I mean, in cotton spinning, you might have flour, coal, other stuff, which rotates with the cotton as well, even if they're not physically present. They're necessary for the production. Now, circulating capital also includes labor power. Now, returning to Marx's sort of more fundamental distinction, recalling what I said just a few minutes ago, labor power enters into the production domain of capital as variable capital. Its laborers are bought on the labor market, their labor time is bought in terms of the potential labor time, the labor power, and then it's put to work under the command of capital in the production process. And it's in the production process that it serves as another element of circulating capital. Now, Marx is very disciplined about how he looks at this, and you have to be patient with him. He's only looking here at the variable capital circulation. He's not looking at the surplus value. So the wages are paid, labor power is bought for a certain amount, let's say, I don't know, £100 a week, something like that. And this £100 a week is also transferred, embodied in the commodities that are produced. And when they're sold, this money comes back as well, in a similar fashion, actually, to the cotton. Okay. Marx, in this part, I'm not going to read this all out. So I just want to emphasize, we're not yet looking at the surplus value. We're just looking at the wages that were paid. They become variable capital. The passing over of the variable capital value, the equivalent value of the wages into the finished commodity. That's what Marx is going to take us through. And he's just making a point here that he's explaining something which does become clearer to us now. He's got this determination of capital in these three forms, right? So the workers, in a sense, exist for capital in two different forms. They exist in circulation on the labor market. And when wages are paid, contracts are signed, whatever, and they're employed, then they exist as an element. That commodity is turned into an element of productive capital. It's a change of form within the circuit of capital. And so what we've got then is these three elements, the fixed capital, the circulating capital, which are commodities in the normal sense of the term, and the circulating capital, which is labor power bought as a commodity. They all exist as elements of the production process. They're all necessary for the production process. But there are still things that lie outside the production process, and in particular, the reproduction of labor power itself and the unpaid domestic labor, which goes into that. So that's to one side. Marx often uses the term fluid capital as a direct synonym for circulating capital. Now, this is very important. He's beginning to develop the dynamic of this now. So we've already said this. The portion of value of productive capital that is spent on labor power has the characteristic in common with other parts of capital. But the other parts of capital, raw materials, are constant capital. So this is where things begin to get, you have to be quite clear about this conceptually, and Marx was, right? So you have an element of constant capital which is circulating at the same rate as variable capital is, right? Which is the raw material aspect that goes into the commodities. Okay. Now, the value of the fluid capital, whether it's means of production or labor power, is advanced only for the time that it takes to produce the product. This value enters in its entirety into the product and returns again completely from circulation with the sale of the product and can be advanced afresh. Okay. Marx, there is a point that actually workers get paid after they've committed their labor power, and this is true, but it doesn't affect the fundamental circulation point. Okay, now this is the first absolutely crucial point to understand, right? These categories of fixed and circulating capital occur in orthodox economics. And for orthodox economics, they in effect replace the more internal, in terms of creation of value relations, of constant and variable capital to this day. So let me just explain this a little bit more. Okay, so we've seen that constant capital, which is about the value transferred, can be in two different categories, right? It can be transferred quite quickly and in its entirety, like the cotton into the finished product as commodity as a product, or it can be transferred bit by bit, because that constant capital it is active in the production process over a longer period of time. Okay, several turnovers. So that's a distinction within constant capital. It's still only transferring value. It's still not the source of new value, but there is a subdivision within it. Okay. Then we have variable capital. Now, variable capital has got, as wage labor we're talking about here, has got a similarity with the circulating part of constant capital, which is that its value enters entirely into the product within a turnover period. The difference is, of course, that it's the source of new value. But for the time being, and I say this is, you have to accept Marx's disciplined approach. For the time, we know it's the source of new value, but at the time being, he's not looking at how that surplus value works in circulation. Now, notice there's kind of like a missing box here. So there's not, in Marx's formulation of it, there's not such a thing as fixed variable capital, but we'll actually, big hint, we'll come back to that in a little while. So the distinction between these two binaries, the first binary is about the transfer over time due to distinctions that arise in productive capital. They're distinctions within production, of capitalist production, but it's about how they work through the circuit of production and circulation, right? Whereas the distinction between content and variable capital is all about not only value creation, but also surplus value creation, which is the valorization process. So what we have in this dimension is capital as a relation, not just technically, if you like, but it's a relation of labor exploitation. Now, there is quite I want to summarize this. I'll show you all the points, right? This is Marx summarizing his analysis so far. So we've got this big caveat that we're not yet looking at surplus value. Now, summarizing his point, point number one, the formal characteristics of fixed and fluid capital arise only from the different turnovers of their capital value, right? How they behave in terms of turnovers, how they exist in time in terms of being elements of productive capital. That's the point of distinction, right? And it's within productive capital that the distinction arises. But it arises within production, but it's played out in the totality of production and circulation. Now, the turnover of fixed capital is for several turnovers. The fixed capital is advanced in its entirety, and once it's advanced, its value passes over bit by bit over a longer period of time. And in contrast, circulating or fluid capital, its value passes over within each turnover period. So the question, this one, I'm not going to spend much time on. It's interesting if you want to look at the detail. Marx does look, and he uses the example of railways here. He looks at how different elements of fixed capital behave in the railway industry. And you wouldn't be surprised to learn that some things like buildings and bridges have a longer lifespan than locomotives and, the track. So there are different periods for fixed capital. He also looks at the question of the reproduction of fixed capital under conditions where productivity of labor is increasing generally, so there's moral depreciation. So he ties it up with the standard view of depreciation. That's one thing. He also looks at the cost of running machinery. And there's three sort of very analytical Marx, as we know. He divides this up into three different elements. And broadly speaking, he sees these costs of keeping the machines running as being elements of circulating capital, basically. Now, there are some accounting tricks that he's aware of, and they continue to this day, believe me, which is that it might be to the individual capitalist advantage to shift these sort of running costs and maintenance costs from the category of circulating capital into what's known as their capital account, or the accounting of fixed capital. Because if they do that, it makes it look as though they're actually made more profits than they really have. And sometimes capitalists, believe it or not, want to use that to pay higher dividends. They can very often do the reverse, by the way, which is also the case, and also it happens an awful lot in mining and extractive industries to this day, which is that they use write-offs to actually pretend that they've made less profit than they've actually made. So there's quite a lot of scope for manipulation of these. And this is another interesting point. Credit is something which Marx constantly says he's not looking at, but then he does look at in volume 2. And of course, what happens is if the fixed capital is enormously big, right? You're talking about huge amounts of machinery or buildings and so on, then that varies by industry. And if you think of fixed capital in some of the industries today, a chip manufacturer being a very well-known one, you actually need billions, not just millions. You need billions to enter into chip manufacture today. And of course, this is back to his long-standing sort of interest in how, from the mechanisms and the necessary functionality of industrial capital, money capital accumulates. and becomes a hoard, becomes a reserve, and can become operational through the credit system. So even if you want to avoid looking at the credit system in terms of a separate area of analysis, we can also see all the time that it's going to get spontaneously generated, if you like, from the functioning of industrial capital. And so the money that's generated in one capital, if it's lent to another capital, is no longer just a reserve, it's becoming credit. Right. So that's a slight pause. I'll tell you why, because then I want you to, if this is the recording, you can take your break now if you want. But I just wanted to refocus. The next section is the crucial one to understand the whole thing. This is the keystone of the arch, if you like. Okay. I think to understand what Marx is doing, you have to be able to work through a single turnover and see what's happening. And that's what I'm going to take one of his examples, and I'm actually going to give it a step-by-step explanation. So he gives us, if you like, his procedure for following this. He says, first of all, you should rationalize the different elements of fixed capital. If you've got bridges and machines and buildings, just work out what the average turnover for their total is, right? So you reduce the separate parts of fixed capital to somewhat, if you like, one aggregate turnover of fixed capital. Even if they're far greater, now this is a really important point. Even though there's more money put into fixed capital at the beginning than there is into circulating capital, if the circulating capital turnovers quickly, there's a lot of it, then actually how quickly it turns over, let me put it another way, and actually it's the reverse case. If it takes a long time to turn over, then it could end up that there's more money going into the circulating capital than into the fixed capital. And that will become more and more apparent in the next few minutes, okay? So what you get then is he's trying to get to the aggregate turnover of the overall capital, that M to M prime, how long before the M comes back. And so that M coming back is going to have two elements to it. It's going to have the M coming back of the depreciation of the fixed capital, and it's going to have the M coming back of the circulating capital. So this is Marx's example. It's 100,000 invested, 80,000 is in fixed capital, 20,000 is in circulating capital, and the circulating capital comes back 5 times in a year. In other words, the capitalist concerned is able to sell a batch of production 5 times in a year, and the money comes back. Right, so let's see how this goes through. We're going to step it through. So 80,000 to the suppliers of fixed capital, they sell the machines or whatever to this individual capitalist. The suppliers of circulating capital, if they're labor power, supply the commodity before they get the money, but they do get the money, hopefully. And so that's the 100,000 being invested. That's the setup, okay? 100,000. So their commodities now in production. The production takes place. I don't have a rotating thing. You imagine that's rotating. And then commodities come out at the end. So there's already 100,000 here. By the way, it's also now distributed differently, because if you just let me just flash that up so you can see it, right? 1/50th of the fixed capital is transferred into the commodity capital, because there's 5 turnovers in a year. It lasts for 10 years. So within each turnover, 1/50th of this 80,000 will pass its value into the commodity product. And that's from there, it's simple arithmetic. That 1/50th of 80,000 is 1.6 thousand, right? So the value transferred, this is constant capital transferred. Here is 20,000. Sorry, that's fixed, that's circulating, 20,000 circulating. We make no distinction, within the 20,000, we don't know how much of wages and how much of raw materials. We just know it's circulating. So that means when these commodities are sold, this element, without still the surplus value, because Marx is not telling us how much surplus value yet, there will be 20 plus the 1.6, 21.6k coming back as revenue to the capitalist. And so look, at the end of this cycle, 78.4, 21.6, back to 100k. Okay, but the forms of the 100k have changed. It's back in money here, but it was commodity capital and it's in productive capital there. So that's one turnover period. Go again. So 20k invested in the circulating capital, 1.6k stays in the hands of the capitalist because he's got to build up the money to replace the 80k, but he can only do that after 50 of these iterations. So that's going to take a little while. So what we've got is 20k goes back into production. This is bought by the circulating commodities. They go into production again. They're sold. Money comes back. The amount here goes down to 76.8. And I've already jumped onto cycle 3, cycle 4. And at the end of the year, after the 5th cycle, what we see is we have got the money comes back. And each time the money comes back, the capitalist builds up a reserve of 1.6k. So after 5 of these, he's got 8k in hand. His value of the fixed capital is depreciated by 8,000 as well. So those two add up to 80,000. And he's still got his 20,000 going back one more time into the circulation capital, buying those commodities. So what we've got then is at the end of the year, 21.6k has come back 5 times. So in actual fact, he advanced 100,000. This is not yet profit, by the way. This is just the existing capital value coming back. And it's just a function of how quickly it comes back, what that amount will be. And if it comes back 5 times a year, by the end of the year, it will be 108,000. Okay. So in actual fact, the more money has come back than the aggregate originally advanced. So Marx says, okay, well, what's the turnover period? Well, actually, the 100 would have come back in less than a year. And that proportion is the 100 divided by 108k, 0.93 a year. In about 11 months is the answer, right? In other words, the same value it's originally advanced, this 80 and 20k, after 11 months, okay, these are sold in batches, but the value will come back just under a year if they all got sold continuously. So that's one example. That's his leading example. Now, just to get a feel for this, we're going to look at it again, but this time we're going to look at 2 turnovers a year. And this will give you an important insight. So once again, this is the fixed capital invested. Once again, we got circulating capital, but because it's only 2 turnovers a year, that means that the circulating capital needs to be more to keep up the same scale of production, because instead of 2 and a bit months production of circulating capital before the money comes back, we've now got 6 months of production, 2 turnovers a year, half a year turnover. And that means you're going to need 2.5 times more. You're going to need 50k in terms of wages, in terms of cotton, in terms of coal, etc., to keep the production flow going. So look, what it means is there's more money at the beginning needs to be advanced than before. Before that was 80k plus 20k. It's now 80k plus 50k. So it's more, right? But the actual scale of production is the same. It's just that the goods, the commodities are sold in 6-month blocks rather than 2 and a bit months blocks. So if you go through the detail, the depreciation here is not a 50th of 80k. In 6 months, it will be a 20th of 80k. So in 6 months, there will be 4,000 depreciation and 4,000 will pass over into the value of the commodities. So at the end of period 1, which is now 6 months, we're going to get a similar distribution. We've got 76k, we've got 54k now, adding up once again to 130, right? But with a different distribution from when we started. Second cycle, 4,000, 4K stays in the hands of the capitalist, and 50K is reinvested. Again, that sets up production. Again, they're sold. Again, the money comes back. And you get a similar result at the end of the year as we had with 5 turnovers a year, okay? Which is the depreciation over the year is still 8K. But what's happened is we've needed to advance more money to get to this end point. The turnover of the capital, the aggregate capital now, doesn't turn over in a year or even less than a year, right? It needs a year and a bit in year 1.2, the actual ratio, before the 130K all comes back as revenue from the goods sold. So the longer the turnover period of the circulating capital, the more advanced capital is required. And that's really important in Marx's argument. Well, we've looked at longer turnover time, the fixed capital. This is an important point in terms of the material basis for cycles in the system as a whole. Marx gives another example, which is from a straightforward bourgeois economist. So remembering they understand turnover, they also understand fixed and circulating. These are sort of surface phenomena. What they don't understand is variable and constant capital, okay, or they don't accept even, right? So this is slightly more complicated because we've got 2 terms for fixed capital and just 1 category of circulating capital. Doesn't matter too much the detail. If you want to work through this when you're reading it, I invite you to, just to check your knowledge understanding, right? Scrope also looks at the effect of credit, and Marx discusses this quite a lot. He's right that you can easily confuse the use of credit with the actual value movements underneath, because credit is when stuff is paid for, gets separated out when the actual value changes its form, if you like. So that can have you need to be able to analyze and distinguish between those 2 things. So what's the significance of this? First of all, the general turnover shape depends on the state of technology, the type of industry, and so on. For an individual capital within any given industry, if it can shorten its overall turnover time, it will increase its profitability because less capital is advanced for the same production and realization of surplus value. Now we can see the example of Scrope. If he could reduce his turnover time from 18 months, they'd get the same result by investing 33,000 rather than 50,000. Okay, so given that the amount of surplus value would be the same, that means you'd make a much higher rate of profit. So decreasing turnover time increases profitability. That's kind of like the bottom line of this. So this is the effect of circulation. This is not actually to do with the degree of exploitation of labor. It's to do with how capital moves in circulation. So the last 2, before I just comment on this finally, Adam Smith confused what circulating capital and fixed capital were. And from that confusion, that's confusion has kind of like been replicated and passed down within orthodox economics ever since. But I didn't start with Adam Smith. We go back to earlier sort of political economy. Actually, Marx is quite appreciative of Kane, how it's pronounced, I'm not sure, because he was the first to think about capital advanced. Only really looked at it in terms of agriculture, but the concept of capital advanced. And in agriculture, normally turnover time would be 1 year. It could be more than a year in certain cases. If you're thinking of livestock, for example, then it would be more than a year. I mean, like it takes more than 1 year for animals to reach maturity and for them to be sold and killed, unfortunately for them, but that's agricultural business. Physiocrats generalize this into industrial capital. So there's some work been done before Smith comes onto the scene. Smith looks at capital advanced in terms of capital which is in circulation, and capital which is in production. Now, that's not the same as what Marx is explaining to us, because all of the elements that we should have looked at move from production into circulation, into money, capital, and back again, right? So that's a different distinction. So what Smith does is he says, okay, well, there's some capital which is always in production, there's some capital that's always in circulation, i.e. the buying and selling, and that's a necessary component of productive capital. And by doing that, he allows for other forms of capitalist enterprise, such as merchants, such as money movers and so on, to also fit into his different categories. But it is a confusion. Marx reminds us once again, he brings this back to his volume 1 fundamentals, if you like. He says, no, what Smith does not understand is that production of surplus value takes place in the production of the commodity. It's how capitalism produces commodities, right? So these differences between circulating capital and fixed capital, they do arise within capitalist production. They then are reflected outside it through circulation, but that's not where they arise. So what he's giving us is a value relational conceptual understanding of capitalist production. And if you like, he's looking at, I mean, all modes of production are going to have these different sort of elements of the production process. But once again, he's so good at this, right? He's giving us the form determination, but that the forms which these elements take within the forms of the capitalist mode of production, as forms of the capitalist mode of production. So this is really just reinforcing this point. This is the reason that Smith's confusion persists, is because it suits the bourgeoisie, right? The distinction between circulation and fixed becomes not only just a superficial one, but the one which obscures the more fundamental one. So the form of appearance obscures the essential difference, which is where does the profit originate from? Well, from surplus labor. Therefore, we have to have different categories of capital depending on what part of capital has been spent on purchasing the means to produce surplus labor. Okay, so Marx's position, this is really important, is both more scientific because it goes to the essence behind the appearance, but at the same time, it's a class-based perspective. That's a really crucial point. That's actually, I couldn't find the quote. Lenin made the point, but it's really crucial for this area. Okay, I just got a handful, a couple other points. This is a slight by the way, but happens to be an important one. So remember I had this sort of 3 categories that we saw before with an empty one. If you think of the theorization of chattel slavery, so that enslaved workers were workers. They produced value and they produced surplus value, but they weren't within the sort of forms of ownership. They weren't circulating capital because they unfortunately were enslaved for more than one turnover. As you know, they were completely bound up for their life period within the production process, right? So this is a new category actually, which is enslaved labor is distinct from free wage labor in that it's not within capitalist terms, it's not circulating capital. Those workers were treated as fixed capital. Unfree labor, enslaved labor is a different distinct category, which is fixed variable capital. It's not it sounds like a contradiction in terms. It's not, it's just a different terminology for the 2 dimensions that we're looking at. Now, Ricardo inherits Smith's confusion, really. He doesn't go beyond it. He doesn't critique it and resolve it. The way Ricardo puts it is slightly different. He just talks about the different categories as how long they're in the durability of fixed capital, which doesn't really help either, because it doesn't get to the crucial point that Marx got, which is how they hand over their value, how they transfer their value. So with Ricardo, we really just, in the end, have 2 categories. So this is where Marx starts off, as we've understood. But what Ricardo does, I've got a little graphic to show this, is he collapses labor within the category of circulating capital and gets rid of the distinction between variable and constant capital. I think get rid of it. He never actually discovered it. It took Marx to discover it. But if we look back in Ricardo and his followers to this day, they obscure that distinction. Okay, so that's the normal picture, if you like, pre-Marx and actually post-Marx as well. There's an awful lot in this which points to the development of Marx's argument in volume 3, because what we're talking about is the difference between the rate of surplus value and what also matters when how that's converted into the rate of profit. So what we're finding is, as well as different organic compositions of capital, different amounts of capital advance are required for different turnover types. So it plays a similar role in volume 3 in the transformation problem. And Marx, this text points to that actually in a couple of places. So there's a continuity in Marx's argument. So this is just my penultimate slide. I think Fox, and it's been pointed out in the reading group, actually is very good. I'm quite warming to Fox, I have to say. He summarizes really well. Marini, I want to come back to. I certainly can say he's thorough. I want to comment on Marini maybe next time. I do think Marini would be a bit livelier if he could explain the examples, and I think Fox is actually slightly better on that, to be honest. Heinrich writes very well. He misses quite a big chunk. He stops at chapter 8, so he doesn't do this detail on turnover. And actually, he doesn't do anything on turnover at all after that. So, I mean, his book is very introductory. So on. What he says is generally good, I think, on this area. So I'm not highly critical of him. We're just pointing out he only goes to a certain point. So what I'm saying in terms of this literature is don't skim on chapter 9. I want you to really feel, to get inside this issue, you need to work through the worked examples to make sure you understand what's going on. And I think that's where Harvey fails, right? He doesn't understand what's going on. There are a couple of framing issues, right, which I won't go into an awful lot of detail, but I think Harvey tends to see the question that what he sees in volume 2, and he's right that he gets this from Marx, right, which is that capital is a process, not a fixed thing. And that comes from Marx, and he's right about that. But that's not enough. It's not just a process. It's a process of expanding value. And hence you have to understand the internal process which appears in circulation, but is not itself circulation. And that's where Harvey's weaker. He doesn't really fully understand that connection. And I would say chapter 3 of his book on volume 2, this begins to really come more evident. He thinks of this as very much as terms of fixed capital, and as a geographer, he's got some right to do that, but also he misses a lot. He misses the question not only of space, but of time. He misses the evolution of the turnover. And he actually does miss chapter 9 and the whole question of circulating capital here. And then, quite extraordinarily, Harvey's account jumps from this part of volume 2 right over to volume 3. And so when he comes back to volume 3, he does pick up again on turnover, and he does make some good points, I have to say. But the order means, the sequence of his argument means that he misses explaining the connection to what we're looking at and the beginning part of volume 3. He doesn't really develop it in the same very disciplined way which Marx does. And this does result, in my view, to quite a serious misdirection this is meant to be a companion to Marx's Capital, right? But he actually replaces Marx's sequence of argument with a different one. And I think actually Engels is a much better companion, a closer friend, a more trusted friend, I would say, in this regard. Because what Engels does try to do is to reconstruct the flow of Marx's argument, whereas I think Harvey's actually deconstructing it in quite a significant way. And so it's a misinterpretation. And this is my final slide. And this is kind of like a summary of the points. a certain reflection. I mean, I've shown a slide before, which I won't put up this time, but you can think of the main body of volume 1, and it's actually more apparent in volume 2, where the sort of the categories move in a certain way. So he starts off with individual capital, and he gives a general outline of the main categories at the level of individual capital. Then he goes into the details, the particularities. In volume 1, this is absolute surplus value, relative surplus value. And here, of course, the particularities are what we're looking at now, right? Which are the particularities of circulation rather than production, or how circulation adds things onto it, right? And then he'll move in volume 2, as he did in volume 1, to social capital, and he'll do that in 2 steps, simple and more extended. It's an interesting point for me because I think there's a slightly undeclared hidden form to volume 3, which follows a similar pattern, which I'll come to later. But I think it's worth you reflecting, because you've read volume 1, you'll know a lot of the content. I mean, Marx does have quite a conscious development from volume 1 to volume 2, and he shows it in many different places. I mean, we know the perspective is different, but it's a sort of like a deepening and a reworking. So we know very well that he's doing this CMC, MCM prime contrast, and we've covered that already. So what he's doing now in volume 2, he's looking not only at value forms, he's looking at capital forms. Okay, that's a distinction which one needs to understand what he's doing here, right? And what he's also doing now is he's moving from the essence to the appearance. Remember what he did before with the essence to appearance of wages, right? He's actually explained to us how the appearance masks the essence and how that appearance is accepted as a bourgeois given, okay? Now, there's another issue here, which is it's apparently capital is self-valorizing. On the surface in circulation, it looks as though it expands itself. It builds its own value, okay? Now, I think in volume 2, this persists, and toward the end of volume 1, I have to say, this persists as a kind of like a dissonance. He's told us that that cannot be true. He's told us that surplus value arises from surplus labor, arises from capital exploiting workers in production. And yet we'll find sections, sentences certainly, but even slightly wider sections where he talks about self-valorization. And I think they're existing side by side in some kind of there's some showdown that is not yet upon us, is going to come. There will be a showdown between these two ideas of valorization and self-valorization. There's going to be this is a contradiction, and it has to be confronted. And I think it is confronted in volume 3. So these are my summary points. I've already made them really. So I think it's just for completeness I put them in there, and you can take note. So there will be 2 lectures, more lectures on turnover and so on. They're both shorter, I promise you, because I've prepared them when I know they'll be shorter. And the one that matters toward the end, the third of these little mini suite of 3, is Marx will come to the circulation of surplus value, and stick around for that. That's it. That's my lecture.
Brilliant. Thank you very much, Andy, for that. So we have about half an hour for questions and discussion and applause. Yes, okay. I can't find my reaction there. I also will applaud. There we are. Yeah, there we go. So over to everybody. I noticed there are a couple of things in the chat. Actually, they're both from Pamela, aren't they? Well, Pamela, you're here, aren't you? So do you want to ask them yourself? Or? Hello?
You're on mute, Pamela.
I can't see her, actually.
Yeah. So this whole, lecture that you've given about circulating capital and turnover, I mean, it just emphasizes the drive to technology, shortening the time in all these different ways that the capitalists do. That was just an obvious point, I assume. Oh yeah, the second point was just a question I've been meaning to ask. When we started volume 1, you recommended this introduction by Engels on value on one of the short books. Could you remind me or us of it, please?
Yeah, absolutely. That question is a nice one for me. Wage, labor, and capital.
Yeah.
Which Marx originally wrote in about 1847 or something like that. And then it was edited with the gains of understanding from Capital. And I think this would have been in the 1870s or something. And so what Engels did is he changed it with this new stuff, or maybe Marx changed, I can't remember. But anyway, and it uses examples from chapter 7 of volume 1, same examples. It's a thing about workers being paid 3 pence an hour, but they produce value at the level of 6 pence an hour. So wage, labor, and capital is, with Engels' introduction in particular, is really, really clear, and popular education.
Okay, thanks.
There is another one which is a bit next level up, but it's still very, very good. It's called Value, Price, and Profit, which is a lecture Marx gave in 1865 to the Working Men's Association, First International. And this is really good because Marx goes into dynamics, explaining class struggle. And you again, having read volume 1, you'll see how much his work on general law of accumulation affected how he tried to explain these dynamics with workers. It's really, really good. In fact, I think it's better than, amongst the best he's ever wrote, because there he's very clear about the effect of competition between workers. And he defends trade unionism while also explaining its limitations. He's got that dialectical approach to trade union struggles.
Thank you.
I seem to remember that Engels saying that the major breakthrough was making a distinction between the concept of the value of labor on the one hand in the earlier writings, and the concept of the value of labor power on the other in the later writings. And Engels says that somewhere in one of those texts, I think you just mentioned, that this was a major theoretical breakthrough that Marx had made. And actually in the later editions of some of these earlier texts, Engels modified them to include a reference to that distinction. And he sort of alters in a way the wording of the text to make that clearer, I think.
Yeah, very good point. Absolutely. I mean, it is worth knowing their sort of personal biographies from that point of view. So after the failed revolutions of 1848, we know that Engels was in Manchester in his factory, and Marx was in the British Museum, British Library. And at some point in the late 1850s, it's certainly by 1857, Marx had made this breakthrough. Yeah. So between 1847 and 1857, exactly. I mean, that was the big breakthrough, the concept of surplus value. Absolutely agree. Yeah.
I mean, the earlier formulations in the manifesto, isn't it? I mean, it's not very clear at all, really, about that distinction, and that is I think Engels says later that's a very significant thing. I like Pamela's reference to the idea of technological innovation. It's interesting the way you presented the argument. It seemed as if when Marx was talking about what you referred to as depreciation, that it was a matter of machinery sort of wearing out and having to be replaced once it had been worn out. But of course, one way of thinking about depreciation is that if there's technological innovation and a new machine is invented, then the old one has to be replaced. It's not because it's worn out, it's just because it's, as it were, now out of date. It has to be scrapped, even if it's not worn out, because of the onward march of technology. And so that idea needs to be factored in, I think, to our understanding of what depreciation involves.
Yeah, that's a very good point. I mean, I'd actually draw a further distinction. I think there are 3 cases, because when he's talking about replacement and maintenance and so on, right? I mean, it's important that the machine doesn't wear out, in the sense that it's got to keep functioning. Yeah.
Yeah, sure.
So what happens is he's making a distinction between the materiality of the machinery or the buildings and their value transfer. So they gotta be there doing their job in production. I mean, the ceilings should not be falling down, etc. They can't wear out, right? So that they're all there. It's just that even though they're in the same physical state as when they started, their value transfer is, that's the sort of exchange value, use value distinction.
I think that's reflected in his. He has two different ways of thinking about the notion of the organic composition of capital, doesn't he, as well? One of them is sort of value related, and the other one is sort of more physically oriented, I think.
Absolutely. I mean, absolutely. He's always got that duality. Absolutely. Yeah. And that is characteristic of capitalist mode of production. It's always there.
Sure.
Could you just say that last bit again, Tony, about the organic composition of capital?
Well, as I recall, when Marx talks about the organic composition of capital, he differentiates between two different ways of thinking about it. And one of them is basically physicalist. He seems to be talking about the sort of the physical machinery and so on and so forth. And if you change the organic composition of capital, what you're doing is introducing a new, more efficient machine and so on and so forth. But he also talks about the concept in a different way, where he says, well, we need to think about simply about this in value terms rather than sort of technological or physical terms. And I think it matters. I can't remember the details, to be honest, but I think it does matter which way you're thinking about it in a particular context. It does make a difference how you think about that particular concept, I think. Well, Andy will be able to say more about that, I'm sure, than I could.
Yeah, go on. We've got Giovanni, then Virginia. Is that okay?
Yeah, sure.
Hi. First of all, Andy, thank you very much for this wonderful lecture that all the time astonished me how you are capable to summarize in a so short time something that is so complex and deep and contradictory in a way. So I just want to touch the little point, the last comment that you made, that I think it was very important, about this third way to understand the depreciation that is connected with the fact that you have to keep in function the machine. I think in this case, we are really understanding how value and also capital is a social relation more than something like a thing or an object, right? Because we are in front of an abstraction, because on one side we say, this machine is going to break, to ruin, to destroy itself. So it's not working from day one like it could. Day after day is working worse. It's a worse machine. But then we are saying, no, not at all. Until the last moment of the depreciation day, thanks to maintaining, we have the machine that as a function, as an abstraction, is doing its job, right? So I think he's showing us how Marx is making a very nuanced and abstract thinking about value, because this value is losing the machine progressively, but in a way is also a convention, because we could say, no, the machine is not the same until the last moment it works, but the value is losing progressively. It's I mean, from the concept of fixed capital against circulating capital. And also, I'm very interested about the last box, I mean, that you left empty, about this fourth conception that the slave, in a way, is on the one hand the machine, because he's a kind of fixed capital, but he's not really a machine. Because he is a living force with labor power. I think this is also connected with this idea of maintenance. What is maintenance? Also, I mean, the daily basket of goods that keep the slave alive is maintenance of the human machine. So I would really like that you tell us more about this slot that you left empty, about slave as fixed variable capital. Thank you.
Ginny, I think you were next.
Yeah,
if you
thanks. Yeah, let me just lower my hand. Yeah, I was wondering whether you were going to cover or where you would factor in deterioration of infrastructure that doesn't get replaced but is still needed. That happens very obviously in Britain a lot now with what's happening to the water, you know, and sewage leaking everywhere, or destruction of trains and things that don't get replaced but need to be replaced, not just for public use but for staying in the game, as it were, and the game switching to something else, apparently, even though it seems obvious to everyone that things need to be repaired and the money isn't put into them. And it doesn't just affect, as I was just saying a moment ago, public use, it affects everything feeding into capital as well. So where does that, if it does, factor into what's been talked about in terms of deterioration and needing and getting, it doesn't always get replaced by new technology. There's always this, anyway, that I think I made the point. Thanks. Yeah.
Well, that's two. Do you want to answer those, Andy? And I know Walter and Tim have got their hands up, but perhaps we'll take responses to the first two and then go to them.
Yeah. Sorry, just thinking how to best approach it. I mean, the thing, I have to be really careful about this because I really don't want to objectify enslaved labor. And there are always two sides to this, right? And so even in volume 1, when Marx writes about wage labor, he does it really in a fairly objectivist kind of way. He doesn't really talk about the experiences of the working class politically. He talks about them socially, if you like. And this is so important when you come to enslaved labor, right? Because the subjectivity and the objectivity are both very violent. And the point is really that I'm trying to establish that there is a category within the capitalist mode of production under which one can extend Marx's theoretical categories. And I mean, I do that in relation to enslaved labor, but it's only part of the story. I mean, the whole subjective element is crucial as well to make the whole thing work. And the whole problem, or whole issue was that it was more totalitarian, right? I mean, with wage labor, there was even the more oppressive forms of wage labor, right? You could say that there's some freedom, inverted commas, because the worker can go and sell themselves somewhere else. I mean, it's a bit inverted commas, depending on how oppressive conditions are. There's no inverted commas with enslaved labor, right? I mean, what is labor power as a commodity is actually different in that mode of exploitation, because the whole being is owned. And so what happens is that enslaved labor is both labor and it's actually another form of commodity capital. And it is very strange and very peculiar. They were capital assets, right? They were bought and sold as capital assets. And so there's a capital market. The internal slave trade actually functioned in some sense as a capital market. So I don't want to go into an awful lot of detail because there's so many peculiarities which a lot of liberal critics and how can I say African Americans have written about this, critiquing enslaved labor as child slavery, and I think they're almost all right. But I also think there is an insight we can get from developing Marxist categories. Also, on the water in the trains deteriorating, I mean, it does apply. I mean, I don't think I made the point, but in the text, there's definitely a thing where Marx says in the early stages of capitalist production, they used force to make these big projects, right? Or pre-capitalist mode of production. If you had a big project, you just made people do it, right? People were made to do it. But in capitalism, often they don't make a profit. And so if they don't make a profit, then they have to be taken on by the state. I think he talked about state capital at one point, didn't he? So I think, yeah, you got for an individual capital, at some point they just might let the stuff run down. But it all applies, but what can I say? I mean, you'd have to do a proper analysis, but it's not, they are allowing the value of the means of production to deteriorate. There's no question that that's happening, right? So long as they can keep on making a profit, they'll do it. They'll always find a way.
So, right, now we have Walter and Tim. I I apologize, I didn't see who came first. So shall we say Walter and then you, Tim, if that's okay? You don't mind. Walter.
Thank you. I was going to make only one point about Heinrich, but Ginny's point raises something else, or reminded me of something else. Back in the 70s, both my wife and I were working with Tony Mazzocchi, who was a leader of the American Chemical Workers Labor Union. And he was complaining about the fact that the chemical capitalists refused to maintain their equipment, thereby endangering the workers. And we were discussing how, therefore, a section or a portion of constant capital was actually taken as profit, therefore artificially raising the rate of profit by not maintaining the machinery. But the point I wanted to raise about Heinrich is this. Andy points to Heinrich's the distinction between fixed and circulating capital. But I remember in the next chapter in Heinrich's little book, where he discusses Marx's tendency for the rate of profit to fall and argues that there is no such tendency. He does that, he proves that, quote unquote, by ignoring fixed capital. And in fact, if you do ignore fixed capital, then there is no tendency for the rate of profit to fall. So Heinrich builds into his critique an assumption which makes his conclusion necessary.
Yeah, you're right. By the way, just on Tony's point, which is related to this about organic and technical composition as well. I mean, most of the commentators actually don't look at when social productivity of labor is increased. Almost all the discussion in the literature is about whether that means that there's going to be more fixed capital or not to engage with a greater productivity of labor. But also what they almost all miss is that there has to be a lot more raw materials as the social productivity of labor increases, right? And you can't avoid that. Marx points to how they try to make it cheaper, but what I'm trying to get at is the increase of the organic composition concerns both fixed and circulating capital, right? Both categories have to be looked at. And the more stuff is needed for a given number of workers, basically. And that's the difference between the technical side, that's more stuff, and actually the value composition. So the technical composition is reflected in the value composition, but then the value composition, that is how much capital is invested in constant and how much is in variable capital, also depends on the rate of wages. I mean, that's the other dimension of it, which again, almost all of the Eurocentric literature, they just separate that out as an uninteresting and not important part, but they're in dynamic interaction actually. And that's already there in volume 1. I mean, in volume 1, Marx makes clear that sometimes capital will invest in windmills, but if the wages are higher, then they won't invest in they won't invest in windmills because they don't need to. They'll just use people to pull, to do the work. So that's already there in Marx.
I think one of the points he has in mind is I think that technological innovation and the capital goods industry might mean that you have a new machine which is much more sophisticated, but actually its value is lower than the old machine because of less labor has gone into its production. So at that point, the distinction becomes significant, I think. Right. So Tim, you've been waiting patiently.
Yeah. I've almost lost my point, but it comes as a distillation of a number of the points that have been raised about Ginny's comment about the technical elements of the infrastructure that are allowed to decompose, but it's about there is always a danger and a tendency towards what I would call a technical fetishism when we talk about the technology or the mechanization sides of the, if you like, the objectification of the rising productivity and its reflection in fixed capital investment, and I think it's important to recognise, just as Andy points out about slave labour, there's a subjectivity and an objectivity to that development, and it's often a story that's not fully worked through by Marxists, that there is, if you like, there's a twofold nature actually to the technological mechanization and transformation of productivity. And Marx is very good on this in the way he illustrates this throughout his analysis, but it's very rarely drawn together as a single theme. But Marx is genuinely recognized as one of the parents of a proper critical social history of technology. And it's one of the dimensions that I think is important as a corrective to avoid a technical determinism taking over, which is very common. And in some respects is a higher level aspect of commodity fetishism in the treatment of the power of total social labor productivity, which Marx begins to talk about in its broadest terms in the Grundrisse. I wish I could formulate this as clearly as Andy does in his lectures, but it's a very important underlying theme, which Marx lays a basis for, which has very seldom been developed fully. And that's the end of my small contribution. Cheers.
I appreciate that point. Actually, I would say that one should think of it even further as capital fetishism. I mean, Marx does use that terminology a few times in Volume 3, and that's what he's building towards. I mean, you can think of capital as productive capital, the technology of it, or as selling, being good at selling, or the money capital form and the sort of particular values which money capital attracts. Like they even talk about value creation when they actually mean profit making, right? So all of this, capital is the agent, right? That's the thing about it, right? So capital fetishism has got two meanings. One is the sort of a narrow one of interest, which Marx also uses, but I think there is a broader one, which is what creates value. Who is the agent who creates value, right? And that includes exactly what you say, the technicist variant, but they're also sort of like, the entrepreneur, the wonderful entrepreneur. And you look at bourgeois society, in every way they celebrate entrepreneurs and not the workers. I mean, like in every way. So yeah, it's a huge point. And Marx is building this thing about, is it valorization or self-valorization, right? It's a bit uncomfortable, I would say. We read it, some aspects, we think, well, he's not qualifying this enough. I thought he was one of our guys. I thought he was critical, right? And then he keeps going about self-valorization, right? But they do come to a head. I mean, these two definitions come to a head.
Yeah. Okay. So Amanda, I noticed you posted something. I can't remember at what point you did it, so I can't actually make much sense of it. An insurgent commodity, though the only one. What did you mean? Are you there? She's not there, right?
She's probably come to sort me out.
All right. All right. Okay. So
no, she's right. I mean, sorry if I was a bit too academic about it, right? I mean, the whole thing about enslaved labor is you can't only look at it. I mean, Tim makes the point as well, right? You can't only look at it that way round. But I do think we do have to go into that territory of the objectification, if you like, of enslaved labor, because it was objectified as a form of capital, as well as the objectification in the labor process. But of course, they completely resisted it. I mean, it was this whole thing about, it's also there in all forms of exploitation, but to a heightened degree, the sort of like the external face and the interior life of the enslaved. There's a huge difference. I mean, what they had to show to the gangmaster and what was really going on. I mean, that's a huge subjective contradiction, right, of racism, basically.
Okay.
Can I just throw in an add to that? I'm currently really enjoying Peter Weiler's book on British Labour and the Cold War, which is about the role that the TUC played, Citrine and Bevan and various other acolytes, in actually undermining trade union, appearing to support, but actually undermining the growth of trade unions in the newly independent colonies. And there's an aspect of that. Their pro-imperialism during the Cold War was incredibly destructive, and it is very rarely commented on in the level of detail that Peter Weiler does. And it's astonishing. His 1988 book has just vanished from the critical literature. No one seems to refer to it. It's brilliant. But it's about, you know, pro-imperialist members of the leaders of the labour movement undermining the organisation of colonial struggles at a really fundamental level. Sorry, there is a connection. I see it, even if I can't articulate it properly.
Okay. So, well, we're very close to the end of our time. So, does anybody have any final call? Pamela, yep, go on.
Yeah, just on what Tim was just saying, the effect of the ideology of imperialism on the workers' movement. Which of course is a perennial struggle for us. The bureaucracy in the trade unions, in the labour movement, particularly obviously in the Labour Party at the moment, and the constant struggles, you know, that are going on now, isn't it? What else to say?
Okay, thank you. Andy, do you want a final word, or?
Well, I'm very happy with what Pamela and Tim were saying at the end, and yeah, I mean, it is a bit, what's the word? It's a bit nerdy, so I don't know how to put it right. But trust Marx is what I can say. He makes a couple of false turns. I'll just warn you, right? This isn't one of them, but and maybe in the next lecture, he explores stuff, goes into it in a depth of detail, which he didn't. In the end, it was not really needed, but that's what he does, you know. And sometimes he didn't get it exactly right. And but this is important, because what he's saying is that capital advanced matters, even for any amount or degree of surplus value. It's not the whole story, because what capitalists think about is profitability. So you also have to look at how much capital they need in order to extract the surplus value and realize it, because that capital advance is an important category. Yeah.
Right. Okay. Thank you very much for that. I think we should thank Andy in the usual way. Tour de force, as always.
Thank you.
And so we'll see you. Oh, a reminder, of course, the next CSSGJ seminar on the 8th of April is Chris Arthur, who's going to be talking about his recent book. So that will obviously be of interest to people attending these lectures and the Capital Volume 2 reading group. So that's in 2 weeks' time. Okay, brilliant. Thank you very much, everybody, for turning up, and we'll see you next time.
Thank you.
Good night.
You all. Cheers, Andy.
Cheers.